third phase of the Leadership Group for Industry Transition, called LeadIT, which is proudly co-chaired by Sweden and India. Through LeadIT, we will continue to drive this global movement for accelerating the green transition of heavy industry.
Leadership Group for Industry Transition यानी LeadIT हमारा साझा ग्लोबल इनिशिएटिव है जिसके अंतर्गत हम लो कार्बन इंडस्ट्रियल ट्रांसफॉर्मेशन पर बल दे रहे हैं। आज हमने इसके तीसरे चरण पर काम करने का निर्णय लिया।
And gentlemen, welcome to the Leadership Group for Industry Transitions 2026 Leaders Roundtable. What you heard just now in the run-up to our starting was both PMs, Prime Ministers of India and Sweden coming together last month to extend LeadIT's mandate until 2030. So we have one question that we want to unpack today. How do we deploy, scale, and implement industry transition at scale? I want to welcome in the studio Felipe Sanchez and Mahendra Shanmugam. I'm Arti Davis, and I will be your moderator for today's session. We have Felipe and Mahendra, CEOs, investors, and senior leaders joining us in the next hour. And we want to ask them how we move forward stronger together. Before we start, I'd like you to help us put LeadIT in context. Felipe.
Thank you, Arti. This is a significant moment for LeadIT. When we saw on the video the leaders of India and Sweden met a few weeks ago, they committed to a new 4-year mandate for the LeadIT initiative. At a political level, that signals that the uncertainty and the uncertain times we see at the moment need partnerships that drive sustainability, resilience, and growth. And in practice, that means focusing on investment-ready projects and delivering at scale.
Thank you, Arti, and yes, absolutely, Felipe, and good morning, everyone. Absolutely, it's critical to keep in mind that the transition in steel and cement and heavy industry in general is not going to be won in countries like Sweden alone. The scale of the industrial activity in India and South Africa and across the global south means that what happens in these markets will determine whether the world reaches our 2050 goals.
We're really happy, of course, to take that question and ask our first keynote speaker, Henrik Henriksson, the CEO of Stegra. Now, Stegra is building the first fully commercial green steel plant in the north of Sweden. And we asked Henrik, there are so many geopolitical turbulent times and whirlwinds right now and regulatory changes. How does Stegra manage this? How do you actually look forward and create this roadmap that you need to have so clearly? And what has this taught you about the business case for green transition? That's what Henrik had to say to us.
Okay, thanks, Arati, for that, and great to be with you all today. Uncertainty, yes, we are definitely living in uncertain times, and during the 5 years that Stegra has been around as a company, founded in 2021, a lot of things have happened. We have had inflation, energy crisis, we have had wars, we have had political uncertainty. I think all the macro changes that you can ask for. So of course that influences and impacts the company. But at the same time, I think we need to realize that as corporate leaders that this uncertain times is the new normal. We will not come back to maybe the stability that we had in the early 2000s. Those days are gone in a way, and now it's time for us to make sure that we can always be ready to adjust to changes and disturbances and deviations in our day-to-day operation and also our strategy. But you're also mentioning the regulatory and geopolitical sort of environment, and on that, that is an important part of Stegra's reality. We are, you can say, a company that was founded based on the regulatory framework that has been put in place in Brussels. That we actually have a price on carbon in Europe, which is unique in our ETS, is something that is fundamental for the existence of us as a company. That our customers are able, on their journey and ambition to lower their CO2 footprint, both in scope 1, 2, and 3, that they are able to monetize CO2 and put a price on it and put that into their cost calculations is rudimental to the change. That allows sort of our customers and their customers to really understand the value of decarbonization, and that is needed. So that part of the framework in EU, if that wasn't in place, I would say we wouldn't exist as a company. Secondly, the regulatory framework is also now addressing the steel industry as one of the hard-to-abate industries, representing 8-9% of the CO2 emissions in the world, by actually forcing the polluter to pay. So from the beginning of this year, actually, during a 10-year period, there will be a phase out of free allowances that has been given to the steel industry to pollute. So now, finally, also compared to many other industries, the steel industry now has to start paying. And of course, that means that the brown steel year by year will become more expensive, and that will open up the door then for the green steel that we and some others now are investing in. We will then have a chance to be competitive, that we will compete on equal terms. So these parts are very important for us in making sure that we have a regulatory environment. And that's why green steel at the moment is a European thing, so to say. And we are looking at other parts of the world also where we will see similar things to ETS, like in Canada, Japan, Singapore, are looking at implementing it. And that is needed then to be able to get the traction for transformation of the steel industry, a price on carbon. What is important when it comes to the policy, if we talk about Europe then, but I would say also globally, is that we are able to hold the line. Big investments like this in Stegra, trying to transform an industry to become more sustainable, but also the incumbents in our industry that are making big efforts to invest to become cleaner and more resilient, requires long-term stability when it comes to the rules of the game. And therefore it is important now that the policymakers in Europe and other parts of the world, they hold the line. We hold the line that we have now sort of set as a frame a few years ago, and that we not change it. That would be devastating for big investments, and also the trust that there is in the whole value chain, not only for us but also for our customers and our suppliers in this transition. So that is a very important part, because what is a positive thing that I'm happy to share with you is that our customers, they are holding the line, and they are expecting also the policymakers to hold the line, and therefore they need to they are staying true to their commitments that they have made. We have a basket of around, or we have a team of around 30 customers that we are working with, that are representing already 75% of our future production. They have made commitments to science-based targets, scope 1, 2, and 3. And those commitments are firm to their investors, to their banks, to their suppliers, to their customers on their side, but also, of course, to their people in their organization. And they are holding on to these targets. They are staying firm with them. If we see any trend with these customers, is that they are actually increasing their ambition and asking for more green steel than before. So the signals we are seeing is that we, together with our customers, we are holding the line, and we need also the policymakers now to do that, to stay the course. If we do that, we will have then the time that is needed, which cannot be done just in a few years, but to transform this industry. And that's where Stegra comes in as an important part. We are a young company. We're coming in not as a disruptor, rather as showing that it's possible, as an enabler, and showing then the incumbents in the industry that there is a market, there is a technology for it, and it is possible to fund and finance a project like this, and then they will follow. If that happens, we will be able to then change not only one company, but a whole industry, and that will then send waves into different kinds of value change. With that, I wish you all a continuous good day and a sort of good event, and thanks for having me.
Thank you so much, Henrik. And of course, that was a very strong message. Holding the line, navigating uncertainty for investment-ready transition. We've heard some very strong messages, and Felipe, I'd love to get your thoughts on what you heard Henrik say.
What resonated for me was Henrik's point on carbon pricing. So we hear time and again when we speak to companies that the EU emissions trading system, the ETS, has been the cornerstone of green industrial projects in Europe. So it's not surprising to hear that important message about holding the line. But it's not just limited to Europe. We see that as robust carbon pricing and carbon markets spread throughout the world, so too do investment opportunities.
And that actually brings us to our second keynote, the importance of investment when it comes to green industrial transition. We're really happy to have Håkan Buske, CEO of FAM, when we asked him a very important question. When you are looking at investing in new technologies or existing technologies, there is a market mechanism, a business reality that rewards short-term gains. How do you take in this environment the long-term view? And how important is it to map technological advances, but also integrate geopolitical uncertainty when you make these very important decisions? This is what Håkan had to say in return.
Thank you, Arati. Dear colleagues and members of LeadIT, it's a pleasure to join you today. Let me begin with a few words about FAM, where I'm the CEO. FAM is a privately owned holding company that manages its assets as an active owner with a long-term ownership horizon. FAM is owned by the three largest Wallenberg foundations via the holding company Wallenberg Investments AB. At FAM, we believe that long-term value creation and sustainability go hand in hand. This is very much how we think about future-proofing, supporting companies in building resilience, adaptability, and competitiveness over time. And I think this perspective becomes increasingly important in today's environment, shaped by geopolitical uncertainty, rapid technology development, shifting value chains, and changing market expectations. In many ways, we operate in a business climate where pace of change is accelerating. But for us, maintaining a long-term perspective remains essential. Since we invest with a long-term ownership horizon, our role is to support and continue develop of our companies over time through growth, transformation, and changing market conditions. This might sometimes be described as being patient, but patient should not be misunderstood as passive. Rather, it's about balancing today's priorities while also preparing for tomorrow's opportunities. In principle, we often return to financial vigilance. Maintaining resilience and room for maneuver allows companies to continue investing in development and innovation also during more challenging periods. History has shown that companies able to navigate through uncertainty with a long-term perspective are often well positioned when industries evolve and market recovers. Marcus Dodde Wallenberg, the third generation Wallenberg, said, "To move from the old to what is about to come is the only tradition worth keeping." And I believe there is something important in that mindset. The importance of looking ahead, continue to invest renewal, competence, and innovation. Which brings me to the second question, the importance of continuously mapping and scanning development around us. For us, this is an essential part of understanding the future value creation. Today, we are operating parallel transitions, the sustainable transition and the digital AI transition. Together, they are reshaping industries, value chains, business model, and competitiveness across all sectors. That is why future-proofing is embedded in how we at FAM think about long-term ownership. In practice, this means continuously assessing technology, developments, geopolitical dynamics, and change across value chains, while staying close to companies supporting their development over time. Because moving from the old to what is about to come requires both renewal and adaptability. And looking ahead, I believe the industrial transition is now entering to a phase where the focus shifts increasingly toward implementation and scale. Many of the technology already exists. The opportunity now lies in scaling them responsibly, integrating them into industrial system, and building long-term competitiveness around them. And ultimately, this transition will depend not only on technology, but also on collaboration, leadership, and the ability to maintain a long-term perspective. So let me conclude with a final reflection. The direction is clear, market is evolving, technologies are developing, and expectations are changing. The question is how we continue to adapt, innovate, and invest for the future. For us at FAM, future-proofing is ultimately about supporting companies navigating the transition with a long-term perspective while helping create sustainability value over time. And if we succeed, the industrial transition will not only represent a challenge, but a significant opportunity for innovation, competitiveness, and long-term value creation. Thank you.
Thanks so much, Håkan. And we want, of course, to say thank you to FAM. And I want to take some key messages from that. Long-term competitiveness in a future-proofing perspective, which is really about creating the resilience of helping industry move and pivot when they need to. Mahendra, we work, of course, on a global scale, and we've heard now messages that are perhaps looking at what we talk about in Europe and the global north. How do you take this question and this message to the global south?
Thank you, Arati. And what we're hearing from our colleague from FAM is that moving from the old to the new is showing us that the world is increasingly seeing the value in supporting the green transition beyond just the global good of the green transition. It is seeing it as competitive and a reality for the global economy. Unfortunately, the global south refuses to see the embeddedness of this competitiveness and transition early and be first movers. They will be left behind in the transition, and the market would force them to be uncompetitive.
So we need to actually work together. Alignment is really critical here across the different stakeholder groups. As we said before, policy, capital, investment, and of course, industry. And that brings us to our first panel for today. We're really happy to have with us online and in the studio our speakers for the first panel. We have Kamal Bali, President MD of Volvo Group in India. Welcome, Kamal. Lina Joherden, CEO of Soltex Technology. Klaus Kohlberg, founder of SEM Vision. And Gustav Werner, Vice President of Innovation and Development at Skanska. Kamal, I want to start with you. Now, you heard, of course, in the keynotes that we started with, we talked about the importance of patience, but knowing when to act. Volvo Group is a pioneer when it comes to questions of green steel, questions of green hydrogen in India, and of course, moving forward when it comes to net zero commitments. So the question we have to you is, how do you do this? How do you look ahead and know when to move, when to act? Who do you work with, and who do you need to have on your side when you take these first mover actions when it comes to net zero commitments? Over to you, Kamal. 1 second, Kamal. We have no sound on this side. Could we try again?
Sorry.
Perfect.
I'm sorry. Am I audible? Sorry.
Absolutely.
Good morning.
Yeah. Good morning, everyone, and thank you, Aarti, for having me on this important panel. Yeah, and I think the question you asked is a very important one, and it's many times a chicken and egg story. But I think when it comes to Volvo, when we committed to net zero, I think the first thing was the leap of faith was the first step. I think because it was important for us to continue to embrace our values across the environmental of the holistic sustainability principle which we embrace so closely, and it continues from being the first commercial vehicle manufacturer to have announced our environmental charter in 1972. So there is a huge genesis to this whole thing. So therefore, the leap of faith was very, very important. But I think the leap of faith has to be anchored in partnerships, shared platforms, and staged investments. And I think that's something which we've learned over the years, and I think this is something very important. But of course, we clearly understand that no single stakeholder can alone solve the future challenges. And to ensure the same, our decisions were anchored in partnerships, as I said, and stage investments over the journey while moving early into the whole ecosystem. Our belief that we need to own the future and thus be ready to act on shaping it. So therefore, if you look at today, we have the very large number of partnerships and all over the last 5 to 7 years, whether it is cell-centric, which is fuel cells with Daimler, Milence is the charging infrastructure, which we've created together with Daimler and Praton. Then we, of course, working very closely with SSAB on fossil-free steel, with Samsung on battery technology, with NVIDIA on digital twins and simulations, with Cespira on software-defined vehicles, together with Daimler. So you see the number of partnerships. This is very important to de-risk and build future technology capability. And I think through many of these initiatives, this is what we have been able to prove that partnerships are really the future leadership. And we've also chosen multiple pathways. And this is very important to ensure more certainty to success. So, which means we have not left any major pathway to decarbonization, which of course means more resources, more development cost. But then we have some very interesting, well evolved systems in Volvo on industrial flexibility, on CAST, which is common architecture, modular and shared platforms, using digital twins and virtual simulations. So we've tried to really economize on those, but working on all the platforms so that decarbonization in either ways is not compromised. And if it is not pathway one, which succeeds ultimately, it's pathway two. So we have also a good journey on pathway two. So that's been this, but clearly to cut the long story short, it actually starts with the leap of faith. When you believe in your value system, you know you're going to put your best foot forward there, and you're going to build an ecosystem so that is supported by it. Yeah.
Thank you so much, Kamal. And of course, you put it very clearly, the leap of faith that comes critically with partnerships. Now, we heard, of course, Felipe, Henrik and Håkan talk about the importance of stakeholders in the value chain. You have Volvo Group, which is an incumbent, making those changes. You have actors like Stegra, who are enablers in this transformation. It'd be great to hear from you what you think about the value chain when it comes to green industrial transition in the areas that LeadIT works, cement, steel, and heavy transport.
It's always good to hear from companies with a historic legacy like Volvo on how they're navigating the transition. And within the LeadIT family, we have technology providers that operate in the value chain, the likes of Saltex and Semvision. For these companies, they are changing the way one of the world's oldest and most capital-intensive industries operate. For them, this means working with incumbents in the very industries they're trying to change. So I wanted to turn to Lina and Klaas with the same question. How do you build trust and commercial relations with large industrial players that turns them from former skeptics to future partners? And Lina from Saltex, I'd start with you.
Thank you, and thank you for having me. So I think the starting point is to respect the skepticism. It is often a sign of operational responsibility. And if you operate a cement plant or a lime kiln, for example, you cannot take unnecessary risks with product quality or uptime or cost per ton, for example. So for us, building trust starts with showing that we understand the reality. We cannot come and give a presentation and then say, now change your core process. We need to show step by step that the technology and the business case hold and that it can meet the industrial requirements. So I would say that three things matter, really. First, we need a strategic fit. So partners must have more than just many plans or a strong brand. We must see that the strategy align, that the long-term directions are the same. And then we need capabilities that complement each other. I would say that a strong positive signal that we have seen is when the technical teams trust each other. They can challenge each other and assumptions, they solve problems together, they speak the same operational language. Then we really have a good basis for collaboration. And then secondly, trust is built through evidence and not promises. So trust is built through real work. And for us, that means a step-by-step validation, lab validation, small-scale testing, larger-scale validation, and then commercial reference projects. And each of these steps must answer commercial and customer questions. So does this work? Does it produce the right quality? Can it be integrated? What does it cost? What risk remains? And so on. And this is important in capital-intensive industries as ours. And large industrial companies move when risk is reduced enough for the next decision. So for us, it has really been important to establish joint and transparent roadmaps and clear milestones, clear decision points. And then thirdly, the human side of the partnership is critical. So these complex projects, they have challenges. Timelines shift, assumptions change, technology might have issues, and we need a trust and governance to handle these problems together. So for us, we have really emphasized regular interaction, clear ownership and governance, and then also to have right people on both sides. So you need the bridge builders between the organization, people who understand both the technology and the industrial reality and who can keep the momentum when things get difficult. It is really about humans in the end. So in summary, we do not turn skeptics into partners by trying to convince them too quickly. We do it by respecting why they are skeptical and then proving progress step by step. We're building strong relationships that can handle uncertainty. So our technology has really been the door opener for us, but it's trust that has turned it to commercial relationships and reality.
And I quite like that mixture between respect and empathy, so sort of soft skills with that sort of hard evidence that's needed. So Klaas, I wanted to come to you with the same question.
Yeah, thank you. I think both Lina and Kamal has really put the words right here when it comes to create trust. Vision, we develop ultra low carbon cement based on industrial waste, the circular economy. So our stakeholders and the incumbents are actually from the whole value chain, from the iron ore mine, where the raw materials are coming from the iron and steel industry, and then from the incumbent traditional cement producers. And finally, the most important, the customers. Everything from ready-mix concrete to precast, but mainly, most important, the real estate construction builders who are setting the goals and the targets for an ultra-low carbon end product. So we have to create trust all around this value chain. And the foundation for that is to have very, very good cooperation and partnership. We have to be very open and transparent and actually underline that we remove the technical risk from our customer and from the partners. And how we do that, very much similar to what Lina said, we are engineers, we are coming from the iron and steel and the cement industry. So we have an engineering background. We start in lab scale, pilot scale, and demo scale when it comes to developing the product. And when we have the product, we do and demonstrate it at a huge scale together with our client and our partners. So we have done that with Vattenfall for Windmill Foundation. We have done it with Linotol, with industrial flooring, and shown that our product works in the same way, with the same equipment, with the same performance as the traditional brown Portland cement. And in addition to that, I think in order to do this, with the roadmap and the business plan must be very trustful as well. And luckily, if we don't sub-optimize in the value chain, but cooperate over the value chain, as was mentioned before here also by Håkan Buske, then the long-term vision is that everybody will win on this, together with the partners. And actually, for our product, we don't need the green premium. If you do this in a really smart way, we can start in Europe because here is the demand. But finally, we have an ambition to go all around the world. And that's, for example, the partnership.
Klaus, we lost you right at the last. Can I ask you to repeat that last sentence for us, Klaus?
Oh, okay, sorry.
Just the last sentence.
Yeah.
We heard you up until then.
Yeah. So finally, partnership all around the value chain is tremendous for us. And what I said is that we don't really need the green premium. So to scale this, we start in Scandinavia and in Europe, but most important, we have to disrupt all around the world, starting in the global south and in India. And that's where the partnership with Tata Steel is so important for us. So thank you.
And Mahendra, we heard there from Klaus that the solutions that Semvision is bringing up have the evidence is showing. We know from Celtex that they've had very successful trials and test validation. So that's the supply side. Where does the demand side of the equation come in?
Very important question, Felipe, and thanks for the presentations on this topic. We're seeing that the global goals are there. We're seeing that the private sector is committed to the issues, and technology is increasing in here. So the question asked, is the demand side ready to meet this? Skanska is where the question lands most directly. So Gustav, you sit at the end of this value chain. Your procurement decisions either validate everything we just heard or they don't. Everything we've heard today, regulatory frameworks, early mover confidence, technology partnerships, ultimately depends on whether buyers like Skanska are willing to pay for the specifically low carbon materials consistently and at scale. Can you tell us what does Skanska need from the rest of this value chain to make this commitment? And what are you prepared to commit in return?
Thank you. I will build on what we just heard from Christer about. We need to start from the customer perspective. Construction is a project-based process, and also when you start with the design, you need to look into the customer needs, and they're willing to invest, but also look over the life cycle value. Here we see a really good potential to an early engagement to drive sustainability and also resource efficiency. And for us, of course, in scope 3, steel, concrete, and asphalt is the most material where we need to have a focus. But it is also dependent on solution that drives down the operational cost, but on an asset, but also, and that is also very much connected to the energy performance. So it's a quite broad perspective when you look at it. But what would we like to see from the value chain? Of course, that's when you have availability and the scale of low carbon materials, and also new and both new and recycled, that has a competitive price and also competitive solution that we can put down to those customer needs that we have on the different projects that we deliver around the world. And of course, that as we talked about, can be connected to the price of carbon. And somewhat they have a very high level of carbon emissions that you need to reduce, or it's very low. But you need to have a competitive price, but also connected to standards and what's the needs for the project as we have. The other part is what I'm thinking about is when we have comparable data, trusted comparable data in line with current standards, to be able to take this to the customers and also to show what we have delivered. We need to have the full value chain delivering data with EPDs that are trustworthy and also are connected to the standards that are accountable for the different customers' asks that we have. The third thing that I'm thinking about is how do we actually handle the price, as you said, the willingness to pay. Here I believe that we need to have some shared risk and business case alignment between each other. There is a shift happening right now And we see a lot of newcomers, like we have Stegra, that are investing quite heavily. And we know that they are trusting on the future, but there are also a lot of old companies that has been running the business for a long time. And of course, the value that they have brought up, that needs to be invested for the future. So by that, what I'm saying is that we need to share the risk and we need to share the investments for the future as well, and not just taking it to the end client, because it's not feasible. And by that, I also see that we have in construction, of course, a lot of the investments are from public procurement. And by that, we can actually have the starting up the scaling. Could we use our joint money or joint investments with the taxpayers' money? And by that, setting a bit more perhaps demands and also criteria within public procurement for creating this value that we want to achieve. We see a lot of different projects that have tested this and with very good result. And we connect that to an early contract involvement from the value chain. We see really value, and we can also push down the price on the project as a whole. You also asked me what we are committed to. Of course, when we come into scaling, we can be an enabler, of course. We have a lot of projects in the construction, and projects are like test beds. And from that, you can take it and scale it from one project to another. But we also need, of course, to have partnering up to reach out our hands and understand the full value chain, but also the end customer. It's not about individual leadership. I think it's a joint effort and an ecosystem of collaboration.
Thanks so much, Gustav. And what I'd like to do now with our panelists is come to the last part of our panel, which is the lightning round. But I'd like to, before we go to that question, just go over what we heard in the panel up until now and the key words that will help us understand the next roadmap until 2030. And that's bridge building, respect, transparency, de-risking. Gustav, you mentioned shared risk. Don't sub-optimize, and global disruption. So with that as a summary of where we are, the last question to all of you is that we are all in different parts of this transition. What is the collaboration that we need to focus upon to create sector-wide transformation? I'm going to ask this question to all of you in the same order that we asked the panel questions. So Kamal, we'll start with you. Lina, Klaas, and Gustav, I give you the last word. Kamal, over to you.
Yeah, thank you, Arati. I think very clearly, and I think all the speakers have covered this topic of collaboration in a very pragmatic way. But I think very clearly the equation is basically, the equation of collaboration is basically a product of, in our case, for instance, heavy duty commercial vehicles, 4 or 5 things. A, renewable energy, supply chain ecosystem, infrastructure, customer TCO, which is the total cost of ownership for the customer. It should be attractive to the customer. Vehicle availability. And I think this is the key. I mean, if each of these partners in the ecosystem operates at 100% and only one operates at 50%, it's simple mathematics. The final equation will lead to only 50%, which means you will have only 50% success. It means the readiness of an evolution of various partners in the ecosystem will have to be very, very high level. If it is 80% for each one operates at 80%, the final outcome may be only 36%. So just to tell you how it works. And therefore, the new model of collaboration is very, very critical, where I would say there are 4 key points there, as some of the colleagues have already spoken. In the new model of collaboration, we need risk should be shared across the ecosystem, number 1. Number 2, supply and demand need to be aggregated. Number 3, investment is staged or sequenced over time so that it doesn't happen in one go. It happens over time as we see success. And number 4, policy that creates confidence to go for scale. by aggregating demand. So I think these are the four things to my mind which are very, very critical as a new model of collaboration. Thank you.
Lina, I'll come to you next.
Yes, no, I fully agree. It's about the ecosystem, and the most important collaboration for us is between the industry, the energy infrastructure, and the policymakers, because the technology exists. So it will be more whether the grids, the electricity supply, the CO2 infrastructure, permitting, investment frameworks, and so on are ready with the same pace. And system-wide transformation will not happen by project. It requires coordination and planning between these different stakeholders. So that is really the focus for us to ensure that that network of same partners.
Klaus.
Yeah, in short term, bottleneck is not the technology, it's the bankability for us who are developing new technologies. The collaboration that has to happen is that the demand side and the financial side are aligned. And that means communicating and committing long-term offtake. So first of a kind plants can be financeable. We are sitting with the technology and we need the customers and we need the financial to really develop it. And it's challenging. We are disrupting the industry, and some of the incumbents who are not forward-leaning, they're sitting with stranded assets, trying to protect them. And that's why we need brave business leader who really understands that there is self-benefit and competitive advantage to be on the forefront. And we want to team up with those ones. So the link between the producer, the off-taker, and the financiers, that's signing the same long-term goals and contracts, that is crucial for us to develop within a few years now to really make something happen here.
Gustav, Skanska has the last word. You're on the demand side. You've heard demand mentioned a couple of times. One sentence. What do you see going forward?
Yeah, I really like what I hear, and also building back on this collaboration and also the ecosystem perspective, but also connected to from a customer perspective, building up what Lina, what you said on the respect on the skepticism, and also coming back to standards. Because if we can also work with standards, that is really a better way of reaching the market much faster in low carbon solutions. But I also see that, as I said previously, we can also use the public sector and trying to, from a regulatory perspective, but also trying to nudge the public procurement to be able to be the shift to driving these with the demand signals, but also coming up with a good procurement framework for this. And at last, I would also build up what we talked about, data. Because if we have data, we can follow up, but we can also set targets for the projects that are coming up. And if we put up targets, we start to measure. And when we measure, we get things done. So that's my end point.
Thank you so much. And we want to thank our panelists for joining us today. We'll move rapidly into panel 2, but of course, before we do that, just to reflect on what we heard, it was very clear. Standards, policy infrastructure, demand signals, technology exists. Now, of course, this is part of the LeadIT 3.0 mandate as we move forward rapidly to 2030. Felipe, unpack some of that for us.
So we know that the decisions that will be made in the next 2 to 3 years in India, South Africa, and Scandinavia will shape industrial emissions for decades to come. And steel is one of the areas where economic opportunity and climate imperative converge most clearly. And that's why navigating the steel transition in a way that's just and equitable is one part of the explicit mandate of LeadIT in its next phase.
Mahinder.
Absolutely. The north-south dimension is the sharpest in the steel and iron value chain. India is the world's second largest producer, and its trajectory will be decisive for the global economy. South Africa's sector is embedded in a broader industrial, employment, and socioeconomic development context that makes the transition politically as well as economically complex.
And that brings us to panel 2. No small questions being asked today. From pilot to planet, bridging the scale gap. We're very happy to have with us on screen Dutoit Niemand, Finance Manager from Score Metals, Louisa Ore, Chief Business Development Officer with Stegra, Prabodha Acharya, Group Chief Sustainability Officer with JSW Steel, and Dr. Atanu Rajan Pal with Tata Steel. Mark, I'd like to come to you first. Now, we talked about, and you've heard during the panel so far and the discussions this far, the importance of the global transition, the importance of replication, of scale, of trust, and how to move forward with technology. Now, you sit in South Africa. LeadIT was there very recently having a workshop with industry partners like yourself, but also the government. Your roadmap and your commitment to net zero is very context specific to where you sit. Tell us what that looks like for you. What are the challenges you need to overcome as you move forward to your net zero goals?
Thank you, Arati. So yes, that is definitely the case. It's a very complex and context-specific conundrum we need to solve here. So just to, from a key challenge point of view, it's important to understand from where the South African steel industry is coming from. And we are currently under severe pressure, and it's driven by global and local dynamics. So from a global point of view, obviously we've got excess steel capacity, and it's estimated that it will be at around 745 million tons by 2028. Also, a recent OECD report showed that a Chinese producer has 15 times or is 15 times more subsidized than a comparative producer in other countries. So this is leading to a situation where these excess, the excess steel is obviously diverted to countries that are less protected through tariff and non-tariff measures. Now, typically in South Africa's case, we've had an ITAC review last year where they've recently implemented or increased our duties to bound rates across various steel products. Unfortunately, we feel that although it's, we accept the increases to the WTO bound rates, it's still not enough to help the industry, considering the huge excess capacity and trade diversion that is happening. In 2025 alone, 1.72 million tons of primary steel products were imported to South Africa, and the imports are accelerating. So also from a local point of view, we're seeing that the lack of demand for steel products is inhibiting our growth. And then we've also got local cost pressures like high electricity prices and inefficiencies, such as failing public infrastructure and other examples. So the industry as a whole is definitely under pressure, and we need government to intervene, and we also need to take that into consideration and the context into consideration, obviously from a decarbonization perspective. We've got these two opposing objectives, which is the economic realities we've just mentioned to you. Almost South Africa going into a survival mode, and if you're not at your best, you're going to fall behind. So the economic pressures are definitely influencing our decarbonization objectives. So understanding what we can do in decarbonization is important. Our electricity price is still a primary, or electricity from Eskom, which is our Electricity Supply Commission, has about 95% coal content in their energy sources. So the fact of the matter is it's really difficult for us to decarbonize quickly. So unless we use alternative renewable energy sources and develop those projects, we won't be able to reach our decarbonization goals. So what we have done to address the challenges is, firstly, we've established a clear roadmap, and I think that's the most important thing. We need to constantly monitor and evaluate where we are in that long-term roadmap and where we're heading. But we need to be cognizant of the factors that we've previously mentioned. From a project perspective, the easiest solution is wheeling arrangement where we wheel energy on from renewable energy plants. So that's the first thing we are currently busy with. Then we've got other embedded projects we are currently looking into, which includes rooftop solar, larger solar installations, as well as battery energy storage solutions.
Dutoit, thank you so much for that.
Cogeneration plants.
I think you've put the
Yeah.
context in clarity for us, and I think that's something we have to keep in mind. All of the facilitators like LeadIT working for this global transition is the context specificity when it comes to industry. Now, Dutoit is talking about industry under pressure. He's talking about the importance of standards, the importance of the ecosystem when it comes to moving forward faster. Felipe, it'd be good to understand as we work towards 2030, what are your thoughts in terms of how we can do this?
Yeah, absolutely, Arti. And I think it's important to remember the context. So if we take India, for example, steel demand has grown 60% in the past 6 years, and companies like JSW are stepping up to meet that demand, which is why I wanted to turn to Praboda to pose to him the question, what does it mean to be the growth engine in this story, while at the same time also leading on decarbonization? Praboda, how do you hold these two things together at the same time?
Thank you, Felipe. I think this is the central paradox you brought in. And I look this as an opportunity also specifically for Indian steel industry. If you look at in JSW, we do not see growth and decarbonization as competing priorities. We see them mutually reinforcing, and provided we really approach the right system thinking to do that. The fast India's steel demand growth is fundamentally linked to development. And whether it is infrastructure, urbanizations, or the energy transition itself, steel demand will continue to rise in India, that we all must acknowledge. And we responsibly meeting that demand is very critical. So the question is not whether we grow, but how do we grow? And that is where we are embedding decarbonization at the core of our growth strategy, not as a retrofit. And this include, if I give example, improving energy efficiency in existing operation and maximizing circularity and the scrap use, and that will give significant low-hanging fruit benefit. We are accelerating renewable energy integration across our footprint. In fact, we have already implemented more than 1 gigawatt of renewable energy, and we are planning to escalate, increase it to 2.5 gigawatt by this year end. We are investing in emerging pathways like green hydrogen. We have already implemented a 25 megawatt electrolyzer and putting this green hydrogen into DRI steel making. We are seeing benefit not in terms of decarbonization, but also in terms of increasing the productivity of the DRI process itself. So we hope the green hydrogen cost will come down, and this will be a mainstay for the decarbonization and growth. The other thing, we are working on the CCUS for deeper decarbonization. We understand carbon capture is going to play an important role in the steel sector, and we are investing at the moment right now. We are already operating 100 ton per day, and we are working on making it in a blast furnace of around 300 ton per day. But looking at all the system level transformation is also has to be added with plant level transformation that we are doing. So decarbonizing supply chain and increasing circularity is one of the important things. Enabling low carbon product supported with robust LCA and EPD framework that we have already launched a product called Green Age to give an opportunity for our customers to decarbonize and decrease their scope 3. And also we do not forget the nature, water and social dimension to have a holistic decarbonization approach. And there we are aligning with TNFD. So finally, it is important to recognize that this transition cannot be driven by producer alone. And I was listening to the earlier panel where we are talking about collaboration. So scaling green steel requires policy alignment. It requires access to affordable clean energy and strong demand signal, which I always tell that pull is always better than push. So mandating demand and having a strong demand signal from customer and also the financiers is very essential to drive this together, growth plus decarbonization. So in that sense, growth and decarbonizations are not parallel tracks. Let me reiterate that. And they are converging. So over time, I think they will define competitiveness together, not only by reducing the cost of the production, but also by enabling decarbonization. Both will drive the competitiveness and support the growth. So hopefully I answer your question, Philip. Thanks.
And we very much look forward to following the exciting developments at JSW through our Green Steel tracker, and perhaps personally me visiting some of those facilities. But I wanted to turn to you, Mahendra, for your thoughts.
It's very exciting. I think the nugget that we're hearing from industry is that the growth and decarbonization are not separate objectives. And this is wonderful. This is exactly what we set out to do when we entered the Paris Agreement. And it's wonderful to hear industry is now in that journey. So the questions transition also focus on technology innovation. But companies like Stegra show us that transition goes well beyond technology. Louisa, can you give us an example how the transition is requiring you to focus on people, skills, knowledge, to build alongside the steel plant itself? And how does this look and the possibility of this partnership to help us in the green transition? Over to you, Louisa.
Thank you so much, and happy to describe how we work with that. So Stegra is actually building the first steel plant in Europe in 50 years. So for us, yes, the technology is very important, but it's as much about the people. If you think about it, the people that have been building steel plants in Europe last time, they've probably retired, unfortunately. And what this means is that we need to make efforts above and beyond to make sure that we have the skills, capabilities, and we build the communities in order to build and operate this plant. So international recruitment has been essential for us. And we actually already have over 55 nationalities in our team. And I think when we think about how we managed to do that, considering we are building this plant in the north of Sweden, it's a small town, less than 30,000 inhabitants. A lot of it is around the purpose. The purpose to decarbonize hard-to-abate industries has been one of the main reasons that we've been able to attract people from around the world to contribute to this effort. And so I think that from a people perspective, realizing the strength of that attraction is very important. The second element I want to speak about is partnerships. They are absolutely essential. It's actually one of our core values at Stegra is we, not me, together. And we have learned that there is not a single company that can solve the challenges that are facing us from a green transition perspective. And it's from the big topics to the small. Again, speaking about people, when we move people from around the world to come to the north of Sweden, an example is partnerships with the local community, with the municipalities. We need to make sure that there's housing, that there's schools for people's kids to go to, and that also needs to be done hand in hand in partnerships. Then it's partnerships for skilling and reskilling. As I mentioned, a lot of the technology that we're now building in Sweden is technology that hasn't been built in Europe before. So here, partnerships with technology and industry partners. We had SKA Metals also presenting. So we work with staff exchanges. So we have a staff exchange for our future hot mill and the steel mill together with SKA, but also a collaboration partnership with JSW, whereby about 40 operators of the DRI plant will be able to get training and operational experience at JSW's Midrex plant. And then finally, also educational institutions and academia, where we have a partnership with the Luleå University of Technology to support research, innovation, but also to make sure that we have a long-term talent pipeline. So I'd say that the purpose helps us a lot with attracting the people, but then partnerships are absolutely essential to ensure that we have the right skills and the right people to build and develop and continue growing the company over time.
Thanks so much, Louisa. And of course, Dr. Paul, no small task. You get the last word on this panel. And now, of course, you are the best person to have the last word on this panel because Tata Steel is running 3 different decarbonization strategies in 3 different geographies, different policies you have to work with, different timelines, different technologies. So we've been here for an hour, but actually we could have started and ended with you, Dr. Pal, because I want to ask you, is there a universal carbon footprint, a carbon model for the best way to transition to green steel? We'd love to hear from your experiences. If you could shed some light to us in the studio, but also to our audience online. Dr. Paul, over to you.
So any company will like to have a single strategy all across the globe. It is easy to manage as far as the resource is concerned. But the problem is each country has their own policy, own carbon credit mechanism, but more importantly, the raw material input for all the countries and utility availability like natural gas or green electricity is different. So if at this moment we want to move forward, so we need to have different strategies in different locations. Let's start with the example of Tata Steel UK. There we are putting up electric arc furnace. The purpose is that there are enough amount of scrap available as a raw material. And you know, UK electricity is mostly green, 80% almost is a green electricity. And we'll get electricity on the green rate. But if we want to do the same thing in India, our 70% of the electricity comes from coal. So we lose that advantage of green electricity here. Though we are putting up a small facility here, more importantly is that the availability of the scrap in the country like India is a big challenge. And we cannot run a big company like us with importing cap from other countries. So that's the one challenge in the electric arc furnace segment. So where there is a scrap, there is a green electricity, you like to go for EAF as a route, and that is the best route to follow. Now if I come to the Netherlands, what we are thinking, entire Europe is thinking that first make DRI initially with natural gas and slowly move into hydrogen. And already some of the companies are successful in doing so. So the 2 things again there. In India, if you want, basically the part of the country in India we are here, the availability of the natural gas is the biggest challenge. And we are not seeing in the near horizon, hydrogen will be available to us with a price which is affordable. So at this moment, the strategy we need to follow is we need to keep our blast furnace alive. And there is another reason to keep our blast furnace alive is our own raw material. Europe mostly import raw material, they can get the best quality 68 plus Fe material. Whereas our case, our survival is based on the low grade raw material 60 to 62%. And if that raw material we need to use, so this green hydrogen with DRI and others, there are a lot of difficulties are there. So we have to survive. So what's the way? So we need to make this blast furnace more greener. So what we are investing on is a technology called easy melt, where we will take the blast furnace or cap, CO2 will convert again into syngas with some amount of hydrogen injection and put it back into the blast furnace. If that cycle happens, then it will be 1/3 of the CO2 what we are emitting today will emit tomorrow. So our belief is that iron making, the molten iron making process have to be there in India. There is another technology we are investing on, which is Hisarna. This initially started in Europe as a part of ULCOS program, where there are drivers were different. This plant runs on a high amount of oxygen injection so that off gas is mostly CO2 capture ready. And that time the thinking was we'll sequester that because Netherlands, our plant is just side of the sea, so we'll sequester it in the sea. But what has happened over the years, Europe, the Netherlands and others is not so friendly or no incentive is available for it. So the Nucor is another US company who gets benefit of CCUS They are partnering with us. So they will take advantage of Hisarna system.
Dr. Paul, I'm going to
for
actually stop
using
you
CC.
there. I mean, you've said the words we need
Just
to
the
hear,
last point
which
I'll
is,
finish,
please.
then you can go on. Last. So for Indian, the Hisarna will be using for the low-grade raw material, where US it will be used for the CCS benefit. Thank you.
So actually, Dr. Paul, I want to ask you one last question to wrap us up. In one word, this system-wide transformation, you mentioned partnerships and context quite specifically. What would you say we need to do to move forward together? One word, Dr. Paul.
So we need to work together. First thing is that hydrogen has to come with a price which is good enough to use for the steel purpose. And second is that we are all putting a lot of emphasis on CCUS. Things are happening. But again, the cost is not giving us the justification to adopt those technology. If any of these two things happen, then maybe the global same universal model can go ahead.
Thank you so much. And with that, we come to the end of this year's Business Leaders Roundtable, Leadership in Action. We want to thank all of our speakers and, of course, everyone that joined us online. From myself, Felipe Mahendra in the studio, we look forward to seeing you next year, same time, same place, 2027, to take these discussions forward. In the meantime, please come online and see us on the website, leadit.org, as well as our LinkedIn profiles to learn more about what we're doing between now and next year. Thank you so much.
Thank you.
Thank you.
Thank you.